Great welcome. So now today we are going to start this important, significant, highly crucial chapter, final accounts, that is preparation of financial statements. Correct? This chapter is very important from the examination point of view because you can expect at least a 14-mark question. What we have seen actually, the past 7 or 8 attempts reflect that almost every year a question comprising of 14 marks, 10 to 14 marks is striking from this particular chapter. So this should actually motivate you why you need to pay extra attention towards this particular chapter. So let's come straight to the point. As far as preparation of final accounts or financial statement is concerned, we know that every entity, whether it happens to be a non-corporate entity or it happens to be a corporate entity, it has to prepare their what we call financial statement. Is it clear to you? And when we say financial statement, indirectly it means actually final accounts. You have already seen actually that in your past phases of education how a sole proprietorship or partnership firm prepare their financial statement. So financial statement need to be prepared by every type of what we call corporate, every type of body, whether it happens to be a non-corporate body or corporate body. Sole proprietorship and partnership firm, they prepare their what we call financial statement in horizontal form. As you have seen in your earlier phases of education, you used to prepare trading account, profit or loss account and balance sheet, but in what we call T-shape. Isn't it or not? However, we will see later on that as far as corporate bodies are concerned, here the preparation of the financial statement is governed by Section 129, Schedule 3 of Companies Act 2013. Is it clear to you? Now, before we move further, let me also tell you, as far as corporate bodies are concerned, some of the corporate bodies follow IND AS. IND AS means Indian Accounting Standard. Indian Accounting Standard are compatible to what we call International Standard, International Financial Reporting Standard. So such corporate entities which have to follow IND AS, they need to prepare their financial statement as per Division 2. However, such corporate entities that follow IND AS is not part of your course. That means you are not concerned with this particular part. Just for your knowledge sake, actually, I wanted to tell you that such corporate bodies which may have to actually follow IND AS, Indian Accounting Standard, correct? They have to prepare their what we call financial statement in as per the what we call laid out formats which are given under Division 2. However, such corporate enterprises who have to follow actually existing accounting standard. Existing accounting standard means such standards which are already prevalent in India. Is it clear to you? So such corporate entities which are following existing accounting standards, they will prepare their financial statement as per Division 1, as per formats which are given in Division 1. So we are more concerned with the corporate enterprises that are following existing accounting standard. It means such enterprises need to follow their financial statement as per Division 1. Now, when we will move over to Division 1, we will see actually some formats are given. And as I have already told you, all the corporate enterprises need to follow as per laid out formats their financial statements. Is it clear to you or not? So first of all, we will talk about what we call balance sheet. This format I have already told you is given under Schedule 3, Part 1. So actually there are two parts. Part 1 deals with balance sheet while Part 2 deals with what we call statement of P&L. When you are going to prepare your balance sheet, the first thing which you need to know is that as far as equity and liability side is concerned, first of all, we need to prepare the financial statement in vertical format, not in horizontal format. Is it clear to you? Number one. First of all, we shall write equity and liability as far as liability side is concerned. First of all, we need to write here equity and liability. Under equity and liability, your first item will be shareholders fund. Is it clear to you? And under shareholders fund, we generally write share capital and reserve and surplus. Keeping into account your level, there are three what we call categories. Keeping into account your level I am talking about, correct? So one is shareholders fund, another one on the equity and liability side is shareholders fund, non-current liability and then current liability. Is it clear to you or not? When you are going to prepare your balance sheet, and especially the equity and liability side under some heads, as I told you, one shareholders fund, then non-current liability and current liability. Similarly, as far as asset side is concerned, as you know, First of all, we are going to asset side is in fact divided into two parts. One is non-current asset, and another is current asset. First of all, under non-current asset. Under non-current asset, we shall write property, plant and equipment. Then we are going to write non-current investments, and then we are going to write deferred tax asset. Honestly speaking, you need not require to stress upon this because again it is outside the scope of your what we call syllabus. So property, plant and equipment, non-current asset, deferred tax asset, then long-term loans and advances, and other current assets. So 5 type of headings, subheadings are there under non-current asset. And when we will write property, plant and equipment, even property, plant and equipment is again subdivided into some what we call important subheadings. For example, tangible property, plant and equipment like land, building, plant, machinery, furniture. Intangible like patent, copyright, trademark, licenses, etc. Similarly, capital work in progress. Capital work in progress means, for example, building under construction. So it is a case of what we call capital work in progress. Similarly, any intangible asset which is still under development. So these 5 items will come under the first category of the non-current asset, that is property, plant and equipment. I have already told you the second one is non-current investment. Then third one is deferred tax asset. Fourth one is long-term, what we call loans and advances. And the next one is other non-current asset. So non-current asset you can say has 5 segments. One, property, plant and equipment, then non-current asset, then deferred tax asset, long-term loans and advances, other non-current, what we call assets. But you need to take care of this particular fact that property, plant and equipment must be reflected under what we call these subheadings, that is tangible, intangible, capital work in progress and intangible assets under development. Then there are current asset. I need not require to actually talk much about current asset. You know that as far as current asset, they comprises of inventory, trade receivable, cash and cash equivalent, short-term loans and advances and other current asset. Is it clear to you? Actually, here I have written in this balance sheet only the major heads. Is it clear to you? First of all, you need to understand shareholders fund. I just told you a moment ago when we are going to prepare the liability side titled as equity and liability. So under what we call equity and liability, the first item happens to be the shareholders fund. I just told you under shareholders fund, we are supposed to write share capital and reserve and surplus. When we will write share capital, we will have to actually reflect authorized share capital, issued share capital, subscribed share capital, paid off capital. Similarly, as far as reserve and surplus are concerned, all type of reserve and surplus will fall under this category. For example, capital reserve, for example, security premium, general reserve, profit and loss account. Similarly, our second category is non-current liability. Now, as far as non-current liability is concerned, non-current liability need to be segregated into 3 parts. Non-current liability has to be segregated into 3 parts. The first part is long-term borrowings. Long-term borrowings. Generally, under long-term borrowings, you will include debentures and long-term loans. Similarly, we will write here other long-term liability. That means non-current liability is segregated into 3 parts: long-term borrowings, other long-term liability. Other long-term liability means such trade payables. Generally, when we use the word trade payable, we always presume that it is a current liability. However, it could be a possibility that trade payable may have to be repaid after a period of 12 months. So such what we call trade payables, which an entity need to pay after 12 months, will be reflected as other long-term liability. Then similarly, we will write long-term provisions, and here we will generally put any long-term provision for employee benefits. So basically, under non-current liability, we will include debentures and term loan. If possible, try to actually put it under long-term borrowing. Similarly, all the creditors which are payable after 12 months. Is it clear to you? Again, it is a non-current liability, but it is better to put it under the subheading other long-term liability. And similarly, long-term provision for employee benefits comes under long-term provision. So you can see actually non-current liability has 3 segments. Similarly, the last one is shareholder fund, non-current liability, and finally we have to write current liability. Even current liability is divided into 4 parts. One is short-term borrowings. If we have taken short-term borrowings, that means borrowings for a period of less than 12 months, it will be classified as short-term borrowings. Similarly, we will write under the second category trade payable. When we say trade payable, it means sundry creditor and bills payable. Then other current liability. Other current liability like bank overdraft, unpaid dividend, income received in advance. Similarly, short-term provisions. Generally, under short-term provision, we will include provision for tax and short-term provision for employee benefits. Is it clear to you? So this is all about your liability side. Coming over to the asset side, we have already seen that under what we call the asset side, we divide the entire asset side into two parts. One happens to be non-current asset and then the current asset. Regarding non-current asset, we are not going to have much problem because generally over there we need to be aware of what we call property, plant and equipment. I have already told you it is divided into two parts, basically tangible and intangible. And we know what are tangible assets. We are also aware of the fact what are intangible assets. We also know now the capital work in progress and intangible asset under development. Then under non-current asset, as I was talking about, under non-current asset, the first one happens to be property, plant and equipment. Under property, plant and equipment, I have already told you tangible, intangible, capital work in progress and intangible asset under development. Then B, that is non-current investment. So non-current investment, as you know, the word non-current means long-term investment. Then C is deferred tax asset. We are not concerned with deferred tax asset. Is it clear to you? These are the three items which you need to be more concerned of with. Then coming over to the current asset, I have already told you under current asset, the first item is inventory. Generally, when we say inventory will include inventory of raw material. That means even the work in progress, then even finished goods. That means under inventory, we have to write the closing stock of raw material, closing stock of work in progress, closing stock of finished goods, even the loose tools and stores and spares. Is it clear to you? The second one is trade receivable. I've already told you trade receivable includes trade debtors and bills receivable. Then cash and cash equivalent. Here we will include checks in draft, cash in hand and cash at bank, that is bank deposits. Is it clear to you? Besides under current asset, we write short-term loans and advances. When we write short-term loans and advances, such loans and advances which we have given for a short period will be included under it, and importantly, even any advance tax paid by your entity will also fall under this particular category. However, there is a controversy with respect to advance tax. Many people include it under short-term loans and advances, while some people include it under other current asset, but it is better to include it under short-term loans and advances. Similarly, other current asset. Under other current asset, we will include prepaid expenses, accrued income, any advances which we have given to employees or suppliers. Is it clear to you? That is how we are supposed to prepare the balance sheet. Then, under part 2, we will have to prepare the statement of P&L. I have already told you the financial statement need to be prepared in vertical format. Is it clear to you? When we will prepare the statement of P&L, the first point is that we need to write revenue from operation. When we say revenue from operation, it means revenue through sale of products or what we call rendering of services. Is it clear to you? Other income. Other income is such income which an entity derives not due to sale of product or rendering of services. Correct? For example, rent received, discount received, commission received, dividend received. All these are examples of other income. So they are from non-operating activities. Whatever income which we get from operating activities will fall under revenue from operation, while all other income, any other income from any other source will fall under other income. Then I will add it. We will get what we call total revenue. Once we have the total revenue, then we will take into account the expenses. Now, when we are going to compute the expenses, we need to actually put the expenses into proper category. The first category is cost of purchases. Second category is change in inventories. Third one is employee benefit expenses, then finance cost, then depreciation and amortization, then other expenses. Now I will total up all the expenses. After totaling all the expenses, now I am going to actually subtract it from what we call total revenue. Then we will get profit before tax. This will be my profit before tax. From here on, I am going to subtract what we call tax expenses. If I am going to subtract the tax expenses, we will get profit after tax or profit for the period. Is it clear to you? We will get profit for the period. It is also known as profits after tax or profit for the period. Now, as I told you, as far as revenue from operation is concerned, whatever sale of product is there, whatever sale of services is there, or revenue from any other operating activity, we will include it. However, if we have paid any duties or taxes, etc., we will have to subtract the same. Is it clear to you? Then we will get the revenue from operation. Regarding other income, I have already told you any such income which an entity derives not from its operating activity, rather from what we call other sources. Interest received. You might have done some investment, so you are going to receive interest and dividend income. Similarly, commission received, discount received, etc. All these are examples of other income. Now, cost of purchases. The first item was cost of purchases. I have written here cost of purchases or raw material consumed. See, when you are going to write your first heading over here, you can write here cost of purchases or raw material consumed. Now I will tell you when you should use the word cost of purchases and when you should use the word cost of raw material consumed. See here. If in the question opening and closing stock of raw material are given, if in the question opening and closing stock of raw material are given, then in that case it is better to write raw material consumed. Because in that case you will consume it this way around. You are going to first of all write opening stock of raw material, then you are going to add your purchases, net purchases, and then you are going to subtract the closing stock of raw material, and this figure will be known as raw material consumed. And when opening and closing stock of raw material is not given, in that case it is simply better to write cost of purchases. Is it clear to you? The first heading is either cost of purchases or raw material consumed. We should use the word raw material consumed when opening and closing stock of raw material is given. Otherwise, better to write cost of purchases. Is it clear? Then we are going to write changes in inventories. In order to compute changes in inventories, first of all, I am going to take the opening stock of work in progress and finished stock. Opening stock of work in progress and finished stock, and then I am going to subtract closing stock of work in progress and what we call finished stock, and then I am going to write it over. This particular figure could be negative or could be positive. Then under what we call employee benefit expenses, that means all such expenses which are related to employees, for example salary and wages, cost of what we call contribution to provident fund or employee security insurance. ESI means employee security insurance, staff welfare expenses, canteen expenses. Basically such items will fall under this particular category. Even bonus will also fall under such category. Finance cost, interest and other borrowings. So whatever interest which you have given on your what we call funds or any other borrowing cost, that will constitute finance cost. Then finally depreciation and amortization I need not require to talk about. Then under other expenses, whatever expenses are there which cannot be what we call included into the aforementioned categories, these expenses will fall under other expenses. For example, power, fuel, rent, repairs, insurance, rates and taxes, miscellaneous expenses, any what we call payment made to auditors, etc. Is it clear to you or not? Once we have prepared a statement of P&L, after that, just a moment. After that, I will have to prepare another statement, correct? And that is known as statement of surplus. Once we have prepared the statement of P&L, then I will have to prepare a statement of surplus also. A statement of surplus. Although it is not necessary, but it is better to prepare it. A statement of surplus. In order to prepare the statement of surplus, what I need to do actually, whatever profits which we have derived through preparation of the statement of P&L, first of all I am going to write that profit over here, that is profit after tax or profit for the period. The last item of a statement of P&L, as I told you, is profit after tax or profit for the period. So whatever profit for the period is there, we are going to write it over here. Is it clear to you or not? Now, if it is given in the question that we are supposed to transfer some amount to general reserve, I will write here transfer to general reserve. Transfer to general reserve. Similarly, it might be given in the question that we may need to transfer some amount for the purpose of dividend. So I am going to write that particular amount over here. So basically these are appropriations. Is it clear to you? General reserve transfer to reserve fund, transfer to general reserve, transfer to dividend equalization fund, or similarly transfer of amount towards payment of dividend. So after this, whatever balance will be there, this balance is known as balance. This balance carried down will be taken to profit and loss to the balance sheet, and under balance sheet, under reserve and surplus, I am going to write this balance as P&L. That means this is the final balance. Final balance means that is after having deducted all the expenses and after making all the appropriations. Is it clear to you or not? Is it clear to you? See here, under balance sheet, I told you we have to write under reserve and surplus. If you remember, over here I was discussing this particular point, that under the category of shareholders fund, we have to write profit and loss account. Sometimes we write it as surplus also. So this surplus means your balance carried down, which you are going to derive by preparing your statement of surplus. Is it clear to you or not? Is it clear? But importantly, you need to take care that this balance carried down will become opening balance for the next year. Similarly, it could be a possibility that our last year's financial accounting year must have ended and there might be some balance. So if there is already a balance in the trial balance, suppose in the trial balance you are being given P&L balance, so you are going to write it in the statement of surplus, that is balance brought down. And then you are going to compute your balance carried down. Is it clear to you? This is how we have to move about as far as this particular chapter is concerned. So these are the formations which I have delivered to you. Now, in order to actually understand this particular chapter quite well, first of all, let's have a look over this particular question. This particular question has struck in December 24 examination. Let's see what is given under it. December 24, 14 marks. I've already told you questions are striking with great regularity and they are comprising of at least 10 to 14 marks. Clear? Following is the trial balance of Alpha Limited for the year ended 31st of 3, 2024. So for the year ended 31st 3, 2024, now here we are being given equity share capital. I need not require to tell you where I am supposed to write. Equity share capital, as you know, it will be written under the balance sheet under the heading what we call shareholders fund. Similarly, we have general reserve. Remember one thing, this general reserve is in trial balance. It will not be written under a statement of surplus. It will be written under reserve and surplus. Any item which is appearing in the trial balance is posted only once. Remember one thing. This was the point I was talking about just a moment ago. Here, profit or loss account credit balance is given in the trial balance itself. So if profit or loss account balance is given in the trial balance, that means this is the closing balance. This is the balance carried down of last year. So it will be brought down in the current year. In the statement of surplus, you are going to write balance brought down. Then we are being given here debentures. Debentures are 3 lakh. I just told you debenture will fall under non-current liability. At least you can write it under non-current liability, and if possible, you can also write it under subheading. First you write the non-current liability, then write your long-term borrowings, and then you put this particular item. Then we have motor vans, machinery and buildings. I need not require to tell you all these are actually tangible property, plant and equipment. Then we have long-term government securities. Long-term government securities means we have made some investment. So long-term, it means they are non-current investment. Then we have sales. Obviously, sales will come under what we call statement of P&L under the first item, revenue from operation. Then sales return, we are going to subtract the same. Then interest on debenture is being given 22,500. Now, interest on debenture is 22,500. That means this much of interest we have paid already. Is it clear to you? Now, if we are going to look very carefully in this particular question, just to make the point, see here, total debentures are 3 lakh, correct? Total debentures are 3 lakh. And if I am going to compute 10%, so logically, because our company has issued 3 lakh worth of debenture and the coupon rate of interest happens to be 10%, so logically in the current year, we should have had paid 30,000 worth of interest, isn't it? However, as we just saw, interest paid is 22,500 only. Interest paid will be considered as an expense and it will come under finance cost. But it also means that there is outstanding interest to the extent of 7,500. Is it clear to you? Further in the question, it is also given, then we are being given, we had reached till up to this particular point. Then purchases are given. I need not require to tell you, it will fall under what we call statement of P&L. Then purchases return are also given. Then we are being given opening stock. Opening stock will be considered for computing changes in inventory. Discount allowed will be written under other expenses. Carriage outward will be written under other expenses. Rent and rates will also be written under other expenses. Income from government securities. Now, income from government security, here we need to exercise a bit of caution. See here, because here we have already gone through this one, that we have made some investment, and we have made investment to the extent of 2 lakh. If we have made investment to the extent of 2 lakh and I'm getting 12% return, so logically return means here interest. So my interest income should be 24,000. And because in the trial balance here it is written that we have received income of 24,000, so that means nothing is accrued or nothing is outstanding, you can say. Is it clear to you? After this, we are being given in this particular question trade receivable. Now, trade receivable, as we know, it will come under current asset. And similarly, after trade receivable, trade payable under current liability, then advertisement expenses. Advertisement expenses will fall under other expenses. Bad debts. If there is bad debts in the trial balance, correct, it will be written under other expenses. And miscellaneous expenditure will, and then we have salaries. Salaries will be written under employee benefit expenses. Then miscellaneous expenditure will also fall under other expenses. Contribution to provident fund and gratuity fund, it is an item related to employees benefit expense. Cash and bank balance is current asset. So this is the information which is given to you as per trial balance. Below, now you are being given that closing stock is 3,50,000. Closing stock will be used for computing changes in inventory, as I told you, but because it is an adjustment, it will also come under what we call current asset later on. Then we have to provide depreciation at the rate of 10%, 20%, and 5%. Is it clear to you? We have to provide depreciation on motor vehicles, on machinery, and on buildings. Is it clear? Then we are being given interest on debenture is payable quarterly, and last quarter interest is yet to be paid. Honestly speaking, we have already traced out that 7,500 is outstanding. But you can also apply this information to find out 7,500. How? Let's have a look. Because our total debentures are worth rupees 3 lakh and 10% is rate of interest. And question says that last quarter's 1 quarter comprises of what we call 3 months. Is it clear to you? 1 quarter comprises of 3 months. There are 4 quarters in an accounting year. Question says that last quarter interest is yet to be paid. So last quarter means the 3 months interest is due. So if I am going to compute this again, it will come to 7,500 only. So that means 7,500 worth of interest on debenture is outstanding, which we have already extracted. Another important point, and very important point, here it is written that trade receivable include 25,000 due to Mr. X. We saw here we saw that total debtors are equal to 10 lakh. Is it clear to you? Total debtors are equal to 10 lakh. See here, debtors or trade receivable. Total debtors are 10 lakhs. So what I am doing, I am segregating these debtors into what we call 2 parts. I am segregating the debtors into 2 parts because question has stated below that trade receivable include a sum of 25,000 due from Mr. X. So total debtors is equal to 10 lakh, no doubt about that. Total debtor is equal to 10 lakh. Now question says that out of these 10 lakh, we are supposed to receive 25,000 from Mr. X. So I will write here 25,000, and if I subtract 25,000 from 10 lakh, I will have 9,75,000. So I segregated the debtors into 2 parts. 25,000 we are supposed to receive from Mr. X. Now question says further, Mr. X who has become insolvent. So Mr. X has become insolvent, and only 25 paisa in a rupee is expected to be recoverable from him. Mr. X has become insolvent, no doubt about that. And it is stated in the question that we expect to receive only 25%. That means we expect that 75% will not be received. If 75% will not be received, I will have to create a provision of 75%. So I will have to compute 75% of 25,000. If I am going to compute 75% of this figure, it will be equal to 18,750. That means I will have to create a provision of 18,750 against these debtors, because we are expecting only 25% will be received and 75% will not be received. So I need to create a provision of 25%. And question has further stated that create a provision for doubtful debts at the rate of 2% on other trade receivable. Total trade receivable were 10 lakhs and 25,000 was due from Mr. X. So 9,75,000 will be considered other, and we have to create a provision at the rate of 2% against this figure. So if I am going to compute 2% of 9,75,000, it will be equal to 19,500. 19,500. Is it clear to you or not? That means our total debtors are 10 lakh, no doubt about that. 9,75,000 plus 25, that is equal to 10 lakh. And our total provision, if I am going to add 19,500 and 18,750, it will be equal to 38,250. 38,250. And net debtors in the balance sheet will be reflected at this particular figure, that is 9,61,750. This is how we are supposed to, what we call, sort out this particular transaction. Is it clear to you? So provision requirement 38,250 and total debtors are 10 lakh. Last point is provide for income tax. As you know, when we are going to prepare a statement of P&L, first of all we need to write revenue from operation, then we will accumulate total expenses, and then we will take the difference between the total revenue and total expenses. The difference comes to profit before tax. And from there on, I am going to subtract provision for tax because it is given in adjustment. It is given in adjustment. Is it clear to you? It is given in adjustment. So that is why, first of all, I am going to write it in the P&L, and later on I need to actually put it under current liability, and if possible, write it under short-term provision. Is it clear to you? Then here, point number 6 says that director proposed a dividend of 10% paid up capital for the year ended 2023. Director proposed a dividend. Actually, no treatment is needed. Correct? No treatment is needed. After having prepared your balance sheet, you are going to simply write a note. You are simply going to write a note. Correct? Proposed dividend is not an obligation. Is not an obligation. It is not considered as an obligation. Therefore, it need not be considered as liability. That means we need not require to create a what we call proposed dividend, because it is not an obligation as per Companies Act 2013 and also as per Accounting Standard AS4. Is it clear to you? So proposed dividend is not considered an obligation, so there is no need to treat it. No need, or you can simply directly write it this way: not obligations, so therefore no need to reflect it in the financial statement. No need to reflect the same in the financial statement. So we need not require to reflect it in the financial statement. Is it clear to you? So you can put it separately that directors have proposed a dividend. That's a different matter. Now also here it is given, in adjustment that directors have decided to transfer 1 lakh to general reserve. Now directors have decided that they are going to transfer 1 lakh to general reserve. I told you, because it is given in adjustment, first of all I am going to write it under statement of surplus, and then I will add it to general reserve, which is already existing in the balance sheet. Is it clear to you? So this is how we are supposed to solve this particular question, although question has been given in a solved manner. And it is very difficult to solve this question in its entirety in these actually tablets. So sometime it becomes very difficult, but still we will try. So in order to solve this particular question, first of all, I will be writing here balance sheet. Logically, balance sheet must be presented first. Is it clear to you? Balance sheet must be presented first. Now, when I will be writing balance sheet, so first of all, you reflect it in this manner. Of course, this is your equity and liability side. So you will be writing here equity and liability. Equity and liability. Equity and liability. Under equity and liability, I have already told you. Just wait. Under equity and liability, the first item basically which we write is shareholders fund. Shareholders fund. If you remember. Under shareholders fund, first of all, we write a share capital. And then we write reserves and surplus. Is it clear to you? Under reserve and surplus. At least leave 2-3 spaces, 2-3 lines as a space, and then you write here to non-current liability. So now you will be writing here non-current liability. After your non-current liability, then you are going to write here current liability. Current liability. Is it clear to you? Then we are going to write here assets. Coming over to the asset side, I will be writing first of all non-current asset. Correct? One, non-current asset. Non-current asset. Is it clear to you? Under non-current asset, I have already told you, first of all, we write property, plant and equipment. Even under property, plant and equipment, first of all, we write tangible. Tangible items. Is it clear to you? Then we write here intangible. You will have to leave some space for the same. Then I am going to write intangible. Generally, capital work in progress and intangible asset under development will not be given to you. Only these two items will be given to you. Under property, plant and equipment, tangible, intangible, and then we will write here B. Under non-current asset, one is property, plant and equipment. Correct? These are our non-current asset. The first one is property, plant and equipment. Then I will write here non-current investment. And in this question, there is non-current investment. Non-current investment. So it will consume a bit of time. No doubt about that. Non-current investment. Is it clear? After this, I will be writing here too current assets. And under the current asset, obviously, we shall be writing inventories. Then we shall be writing trade receivable. And then cash and cash equivalent. CE, cash equivalent. Depending upon the fact whether any short-term loans and advances are given or not, short-term loans and advances. And finally, other current asset, OCA. Is it clear to you? This is how I need to draw the balance sheet. Now, the important point is that in the next column, see here, I have written notes and explanation. That means I will prepare the notes simultaneously. Here itself, I need not require to prepare the notes separately. So, notes and explanations, I will write over here itself. Notes and explanations. And then finally, I will write the amount. This is how I will be preparing the balance sheet. Is it clear to you or not? After this, obviously, I've already told you it will consume a bit of time. Then, actually, I've already solved the question. Actually, I can simply show you the solution, but that is not the way to do the things. Now I will be preparing a statement of P&L. I'm simply writing, just to save the time, statement of P&L. In order to prepare the statement of P&L, similar to the last one, first of all, I will be writing here notes and explanation. That means I will prepare the notes simultaneously. Notes and explanation. And then I will write the amount. Obviously here I will be writing particulars. And again, you need to actually draw out the format. That is very important. The first one is revenue from operations. Kindly leave at least 2 lines, correct? Then you write other income. Again, leave at least 2 lines. Then write total revenue. This is your total revenue. Then from the total revenue, we shall have to subtract the expenses. As you know, I will write here expenses. Is it clear to you? Under expenses, I have already told you, I will write here cost of purchases, because I am not writing here cost of raw material consumed. Reason is that opening and closing stock of raw material is not given. So cost of purchases. Then I will be writing here changes in inventories. Changes in inventories. Then you write here employee benefit expenses. Employee, I'm writing in short form, employee benefit expenses. Is it clear to you? Now your fourth category will be your finance cost. Finance cost. After finance cost, of course, there will be amortization, depreciation and amortization. Depreciation and amortization. So this is how. And finally, you have to write other expenses. Is it clear to you? So once you have prepared this thing, now I need to have a question sheet with me. Otherwise, it is not possible to, every time I cannot move here and there. The first item, as I told you, happens to be equity share capital. So I need not require to tell you where I need to write it. So here is the share capital. I will simply write here equity share capital. Now, equity share capital in this case, which is given to us, is 3 lakh shares. 3 lakh shares at the rate of 10 each. I will simply put the amount over here, that is equal to 30 lakhs. You can prepare the notes separately also, but I would advise you to prepare it this way around, because it will save your time in the examination. Correct? Besides that, now we are being given general reserve. General reserve is already existing in the balance sheet. It will come under reserve and surplus. An item which exists in the trial balance is posted only once. Remember one thing. So there is already a balance in the general reserve to the extent of 2 lakh. Is it clear to you? Then profit or loss account credit balance. I told you profit or loss account credit balance will be reflected under statement of surplus. So I will have to prepare a statement of surplus later on. So I will be preparing. This is my statement of surplus. SOS. And under statement of surplus, I will write this as balance brought down, 3 lakh. Then we have 10% debentures. I have already told you 10% debentures. 10% debenture will be put under liability side. So you are going to write it under what we call your non-current liability. Correct? Under your non-current liability, if possible, you can also write long-term borrowings. Otherwise, simply put over here 10% debentures. This is your long-term liability, 10% debentures, and the amount is 3 lakhs. So you will be writing here 3 lakhs. This is your long-term borrowings. Then we have here motor vans, machinery and building. First of all, let me come over to the asset side. This is my asset side. And under the asset side, Just wait. So under the asset side, first of all, I will be writing motor vans. Correct? Obviously, they are tangible, so motor vans is equal to how much? Motor vans is equal to, in this particular case, 4 lakh. And remember one thing, below there was an adjustment in point number 2, the rate of depreciation. Now depreciation will be 10%, that is equal to 40,000. So I will be writing 40,000. So motor vehicles, I will write in the outer column now, or I will write 3,60,000. Is it clear to you or not? Similarly, we have then machinery. So you simply take the figure of machinery first, that is equal to 20 lakh. And below it is given in point number 2, machinery need to be depreciated by 20%. So 20% will be equal to 4 lakh. So you will be writing here 16 lakh. You will be writing here 16 lakh. Then we have buildings also. So we shall write here buildings. And even in building, we have to provide depreciation. So amount of building is 12 lakh, and below it is written that we have to provide 5% depreciation, that will be equal to 60,000. So I will be writing here 11 lakh 40,000. Is it clear to you or not? Now I will add all these items and I will put them in the outer column. If I am going to put them in the outer column, it will be equal to 360 plus 1600 plus 1140. That is equal to 31 lakh. So in the outer column, I will write 31 lakh. At the same time, I will compute the total depreciation. Total depreciation 40 plus 4 lakh plus 60, that comes to 5 lakh. So I can directly write the depreciation over here. There is P&L. P&L is below. So here we have written depreciation. So depreciation, I will write here 5 lakh. We have depreciation at this moment to the extent of 5 lakh. Is it clear to you or not? Is it clear to you? So this is how you are supposed to do this particular part. Just a second. I want to have as possible neatness as much possible. Actually, time gets consumed only with respect to the formations. This is the only problem. But anyway, next item is long-term government securities. Now, long-term government securities, I've already told you, I'm going to first of all write here, the long-term government security, it's an asset and it will be considered as non-current investment. So 12% long-term government securities. That is equal to, in this particular case, 2 lakh. So I will be writing here 2 lakh. Then we have here sales. So coming over to the sales, I need not require to tell you where I am supposed to write the amount of sales. Amount of sales is actually 60 lakh, no doubt about that. But I will have to subtract the sales return also. Next item is sales return, and amount of sales return is actually 3 lakh. So in the outer column, I will be writing 57 lakh. Is it clear to you or not? In the outer column, I will write 57 lakh. And then we are given in this particular case, interest on debenture. So interest on debenture is a payment. Remember one thing, I've already told you, interest on debenture, I will be writing here interest on debenture. Now interest on debenture, you have paid 22,500. We have paid 22,500, but I told you earlier that 7,500 of interest is outstanding. So I will be writing 7,500 of interest. This 7,500 will be reflected. This 7,500 will be reflected under current liability and under the current liability. And logically, if possible, I'm not telling that, if at least you should know that it comes under what we call current liability. Otherwise, if possible, you can write it under other current liability. Under other current liability. Is it clear to you or not? So interest on debenture will be considered as your what we call other current liability, and under the other current liability, you simply write interest on debenture. outstanding. Interest on debenture outstanding to the extent of 7,500. Now next item, as you can see, is after this we have where we have on. We were up to sales return, interest on debenture. Next item is purchases. Coming over to the purchases. Because in this question opening stock of raw material is not given, so I will simply write purchases. Amount of purchases is equal to 36 lakhs. So I will write here 36 lakhs. Correct? And I will subtract purchases return, and the purchases return is equal to 4 lakh. And in the outer column I will be writing 32 lakhs. Is it clear to you or not? Then we have in this case opening stock. As you know, opening stock will be used. See, when we write opening stock, it always means opening stock of finished goods. Anyway, so opening stock is given to you and opening stock is 3 lakh. So I will subtract closing stock also. Now closing stock given as an adjustment, that is 3,50,000. So you can see here, when I will subtract 3,50,000 from 3 lakh, I will get a negative item, and the negative item will be equal to 50,000. Negative item will be equal to 50,000. And closing stock, I must not forget in putting up over here under inventories, that is closing stock. So closing stock 3,50,000, because it is an adjustment, must come twice. 3,50,000. Besides that, we have discount allowed. I told you discount allowed will be written under other expenses. So discount allowed, I will write over here discount allowed. As far as discount allowed is concerned, that is equal to 7,500. So you will be writing 7,500. Then we have carriage outward. Whether carriage is outward or inward, you are going to write it over here itself. Is it clear to you or not? Carriage inward, you need not require to add it to purchases as you normally do. Correct? Carriage outward in this particular case is 1,50,000. So I will be writing 1,50,000. After that, we are being given rent and rates. So rent and rates, I will write here 50,000. 7,500 discount allowed, 1,50,000, 50,000. Okay, then we are being given income from government securities. Income from government securities, obviously whatever income which we receive, not on account of sale of product or sale of services. Correct? Such income is known as other income. So I will write it under other income, that is interest or income, whatever you may like to write, interest on government securities. So interest on government securities is 24,000. You are going to write here 24,000. Then we have in this particular case trade receivable. I was talking about this particular point which I explained earlier. Now my total trade receivable which I computed earlier is equal to 10 lakh. 9,75,000 plus 25, but we created a provision to the extent of, I think it was 38,250. So 38,250 was the provision, and your net debtors will be equal to 9,61,750, which you will have to put over here. Is it clear to you? Now the point is that debtors are given in the trial balance 10 lakhs, so trial balance item is posted only once. However, the provision which you have created, it is an adjustment. So provision for doubtful debts, provision for any provision, correct, which you are going to create, or any provision which we are supposed to create on account of adjustment against debtors will be written over here. So provision for doubtful debts, provision for doubtful debts, and which in this case is 38,250. 38,250. Then we have trade payables. Trade payable is equal to 2 lakh. So we shall be writing trade payable. Where is trade payable? Okay, I will be writing trade payable. So trade payable in this particular case is given to us as 2 lakh. So I will be writing 2 lakh. Is it clear to you? Trade payable. After trade payable, again we are given advertisement expenses. So advertisement expenses I will put over here, advertisement expenses. Advertisement expenses. Now advertisement expenses will be 1,50,000. Further, in this particular case, you have bad debts. Any bad debts which is appearing in the trial balance, bad debts. These bad debts are as per trial balance. This provision was as per adjustment. So trial balance as per bad debts is equal to 20,000. You simply have to write over here. If there would have been any provision in the trial balance, you would have written here itself, but as a negative item. This is the only point which you need to take care of. Is it clear to you? Then we are being given salaries. I told you it is related to employee benefit expenses. So I will write here salaries. Amount of salary is equal to 6,72,000. So I will be writing 6,72,000. Then miscellaneous expenditures are given. So miscellaneous expenditure, I will write here, miscellaneous expenditure in this particular case is equal to 30,000. 30,000. Miscellaneous expenditure is equal to 30,000. Is it clear to you? After this, we are being given in this particular case contribution to provident fund and gratuity fund. Contribution to, that will come under employee benefit expenses. Contribution to provident fund, gratuity fund, or employee security fund, it always comes over here. That is equal to 1 lakh. 1 lakh. Correct? And then we are being given cash at bank and in hand. So cash at bank, we will write here cash at bank and in hand. In hand. That will be equal to 2,22,000. Then first information is already done, closing stock. Second information, depreciation is done. Third is already done, interest outstanding. Then fourth one, provision we have written. Now income, actually we need not require to do anything with respect to what we call dividend. I have already told you, because as per accounting standard AS4 and Companies Act 2013, proposed dividend is not going to be considered as an obligation. So no need to reflect it as a liability. Now provide for income tax, that I will write, don't worry. And then director proposed a dividend of 10%, it will not be done. Transfer to general reserve. Now transfer to general reserve will be written under what we call a statement of surplus, transfer to general reserve, that is equal to 1 lakh. Because it is given in adjustment, so that means in the current year we have transferred 1 lakh to general reserve. So what will happen? General reserve, which was already existing in the balance sheet, will increase by 1 lakh. It will increase by 1 lakh due to transfer. Is it clear to you or not? So this is all what is given to us as far as this particular question is concerned. Isn't it or not? So now what we are going to do, obviously we are going to now tally it, and in order to tally the same, first of all I will have to tally this part, correct? And for that I need a scale also, and my phone is also ringing. This is the problem. So now your total will be equal to 57,24,000, correct? 57,24,000. This will be your total. Then I am going to compute the total of purchases. Of course, it's 32 lakh. Changes in inventory negative. As far as salaries are concerned, it will be equal to 7,72,000. Then interest on debenture, 22,500 plus 7,500 will be equal to 30,000. And I will have to compute this total. This total will be equal to how much? 7,500 plus 1,50,000 plus 50 and 20, 70,000 plus 38,250 and plus 150 plus 30, 180. So as per my calculation, it is coming to 4,45,750. 4,45,750. Correct? Now you are going to add your expenses. 32 lakh minus 50,000 plus 7,72,000 plus 30,000 and plus 4,45,750. So your total expenses will be equal to 4,89,750. 4,89,750 will be your total expenses. Once you have computed your total expenses, the next point is now you are going to compute profit before tax. In order to compute profit before tax, correct, from total revenue, you will have to subtract what we call your total of the expenses. Your total expenses are 48 lakh 90. Sorry, I have written, just wait. Your total expenses are 48 lakh, just let me check it up, 48,97,750. This will be your total expenses. Is it clear to you? Now if we are going to subtract it from what we call revenue from operation, so it will come to 6 lakh. Profit before tax will be equal to 8 lakh. My eyesight have become weak. It's in 8,26,250. 8,26,250. Kindly check by yourself also. Is it clear to you? And then finally I will have to write here. Tax expenses. Tax expenses. In your adjustment number 5, if you are going to have a look, you will find that over there it is given that we have to provide for taxation. That means we have to create a tax provision, and that amount is equal to 2 lakh. So ultimately my net profit for the year will be equal to how much? My net profit for the year will be equal to 6,26,750, 250. Is it clear to you? 6,26,000, 6 lakh, is it? Let me compute this total. I'm having a doubt over this. Just tell me. I think it is 8,76,000. Actually, this calculator screen is not up to the mark. Actually, that is why I'm having a bit of problem. 8,76,250, but you also make a check and subtract 2 lakh. You will have 6,76,250. Anyway, so whatever net profit is there, before that you need to actually exercise caution over here in the sense, because sometimes we write here provision for tax, but we forget it to actually put in the what we call balance sheet. Because in the balance sheet I told you under current liability, especially under short-term provisions, correct, under short-term provisions we have to write it provision for tax. Or you can at least write it under current liability. That is more than sufficient. Don't worry about that. That is equal to 2 lakh. That is equal to 2 lakh. Is it clear to you or not? So this is how you are supposed to okay. And then this is our asset side. You can see how difficult it is to actually present in these electronic tablets. Actually, these questions are easy to do in the whiteboard or blackboard. Correct? And I just don't want to actually simply read the solution. I just want to do it as if I myself is completely doing the question in the examination. Is it clear to you? So now what we were doing, we were talking about a statement of P&L. We have completed the statement of P&L, and once it is completed, now this profit which we have, This profit is known as profit after tax or profit for the period. So this profit for the period will be written over here, as I told you, profit for the period. Profit for the period. So profit for the period, as you have seen, is equal to 6,76,250. Now there is already a balance of 3 lakhs, so total profits available now is equal to 9,76,250. And because we have transferred 1 lakh to the general reserve, so 8,76,250 is my balance carried down. This will be considered as balance carried down, and this balance will be written in the balance sheet. Now we are going to write this balance in the balance sheet under reserve and surplus. So I will be writing here P&L. You can write here in brackets surplus. So this is your surplus. The surplus was how much? I've forgotten the amount of surplus. 876,250. So 876,250 I will have to write here. Okay, I will write in outer column 876,250, and reserve and surplus is 3 lakh, but it is better to combine, correct, and then write in the outer column. So this is how you are supposed to do, and ultimately let me also tell you, your balance sheet total must come to your balance sheet total 48,33,750, and kindly make a check. 48,33,750 should be what we call total of your balance sheet, correct? So 48,33,750. Is it clear to you or not? So this is how we are supposed to do this particular chapter, and this was the first question which I did. It took a pretty long time, no doubt about that, but I wanted to give you a complete comprehensive solution. Correct? Shall meet you in the next session.